Hello again, everybody. It's Harry Boxer, the Technical Trader. It's Wednesday, September 8th. These are the charts of the day. And today, as promised yesterday, a review of some of the Boxer shorts. There's plenty beautiful, good-looking bullish charts out there, but we're starting to see just as many bearish ones. A very mixed picture, but regardless, the trend is your friend. The trend is down on these stocks. Let's start off with Almost Family, AFAM, which has been on our list since earlier this year when it cracked. Notice that this big wedge is formed, and it looks to me like after 1, 2, 3, 4 waves, we may get a fifth that takes us down near the $20 range. That's my new trading target on AFAM. AMED, similar background, similar chart pattern, but just as bad. Broke a topping formation in May, slipped lower, formed a little bear wedge after gapping down, and then gapped down big time, bounced and pulled back. Right now in a big wedge pattern near the top of the declining channel. A sharp move could ensue to the downside if it breaks down below the 22.5 23 zone, and which could lead to something in the high teens, and that'll be our trading targets. Let's call it 18. Capella Education, one of the educational stocks that have been getting hammered of late due to some legislation. You can see the big move down from the mid-90s to the mid-50s, resulted in a bounce back towards the high 60s, and then a rollover. Yesterday the stock dropped 388. Today's up at 12 cents, but not much after a 388 drop and more of a dead cat bounce, if you ask me. Looks to me like a retest of the lows near 55 may take place, perhaps even a move down towards the major trend line support down around 52. That's my next trading target. Conceptus. It's been in a downtrend since February when it was in the low 20s. It dropped all the way down 12 after cracking key neckline support. In early July, the stock is then morphed into a bear wedge. If this breaks to the downside, look for a move down towards the 11 range, maybe even as low as 9.5 or 10. Cree, one of last year's darlings. You can see the stock ran from the 12 range up to into the 80s, reaching its highs about 83.4 range. Came down hard in May, bounced around. Actually broke out in July, but on low volume with no technicals, and then it rolled over, cracked, bounced back, formed a little bear wedge, and then that was crushed today with down 445, 8.1%. But you can see a new 2010 low, and certainly in a new downtrend, which could retrace 50% of the entire move back down into potentially the low to mid 30s, but we'll see if that does occur. In any case, short-term oversold, may get a bounce, but looking for lower levels. Let's call the next trading target at 45. Many retail stocks look weak. City Trends in particular looks ugly. After this big wedge formed, it broke, spiked down in mid-August, formed the bear flag, broke that to the downside, snapped back to it, and now it's rolled over again. Our target at 21 seems doable very quickly, and a break of that level could lead to something into the mid-teens, mid to high teens. Let's call it 17.5 for our next target, once the 20.5 three-quarter level is taken out. DeVry, another educational stock that's gotten hammered, rolled over in April and May. It continued a downtrend, had a bounce back in July briefly, and then rolled over hard, now forming a bear flag. This may not be done yet. It sure looks like it could be lower, although there is major support in this zone going back a couple of years, 2.5 years now. So we'll see if we can break that. If we do, it could be curtains. Next up is Guess, another retailer, apparel stores. Broke hard in May and June, kept sliding, had a falling wedge, broke out of that to the upside, snapped back to resistance, rolled over hard with a downside breakaway gap, and now formed a bear flag. If this bear flag is taken out to the downside, look for a retest of the low around 30. That's my next trading target. Beyond that, something around 27. Jinping International is looking as bad as it can get. It's topped out, broke hard in April, formed a big bear wedge for 2 months, broke hard again in July, now forming another wedge. Looks like we may get another leg down that could take us down to 8.5. That's my next trading target. Blue Nile, another retailer. You can tell we have a theme going here. This retailer, after a big run-up, topped out with a little head and shoulders pattern here, broke down, snapped back to the neckline, rolled over, retested the lows twice, formed a consolidation, could not get through the declining tops line, and rolled over hard early August. Since then, kind of a bearish-looking flag, wouldn't you say? Next move, I retested that $36 level from July of '09. SWI Solar Winds. After a massive top form, the stock cracked hard in July. It bounced back and now is backing and filling in what looks like a potential bear wedge formation. On the other hand, if the stock breaks out above this zone here, we have a very low risk short. Here, the break could get us back down to a retest of 12 or lower. But certainly a breakout over 15.5 would be a place to maybe potentially stop it. And then secondary resistance up around 17.5. So those are levels to keep an eye on. Solar Winds. TNS continues lower. A pretty ugly chart, wouldn't you say? And a big gap here in early August, rolled over mid-August, bounced back, and has formed certainly what looks like a bear flag in this zone here. Lower levels maybe due. 13.5 next trading target. Universal Corp, UVV. After the hard break in May and the bounce back forming a bear flag that failed at resistance here, the stock then got pummeled in August, and since then has formed a bear flag. Today dropping another 73 cents. The stock appears headed for the $32 range, or next trading target, which is the juxtaposition of the bottom of the channel in this lateral price support. There you have it for today. Some short ideas. Talk to you tomorrow.